So, I mean, what now? Let's talk about the jobs report for July. 73,000 jobs added last month. Why was it so bad?
Yeah, that's a great question. I mean, you have a number of factors going on. You have, over the last 3 months, really, a lot of companies kind of pressing pause on expansion and hiring, especially companies that are involved in importing goods from anywhere in the world, which is most companies. Most companies are importing some kind of good or another, some kind of input or raw material. And given that, we have Liberation Day tariff numbers, and then those are paused and then delayed, and then we get different numbers coming out, and then trade deals kind of trickling through. If you're a large company and you're thinking about investing in a factory or expanding a factory, you're thinking about, reorganizing a department or hiring people, very hard to make decisions with millions of dollars on the line when you don't know what your tax bill is going to be. You don't know what your costs are going to be. So that uncertainty, I think, caused a big slowdown in companies that were planning on hiring. Then you have people who are leaving jobs for one reason or another, just sort of normal transition. And then you also have, at the federal level, the federal government's been aggressive trying to start laying off federal workers, trying to reduce the federal workforce. So that's a factor. It's not the only thing. But all of these things, I think, are kind of putting pressure on the jobs report. And, the explosion of AI that we've talked about before, it's happening, but it's not really creating the jobs to replace these other kinds of headwinds that are the uncertainty and the delays that people are making in terms of hiring. So maybe that will get better as we get a little bit more certainty around what the trade regime is going to look like. But it's what economists have been saying for a while. They've been criticized. There've been people on the right criticizing economists for not knowing what they're talking about. But at the end of the day, uncertainty really matters, and taxes matter, and we should be thinking about what's the best way to promote stability and a kind of a pro-growth environment all through government, not just on the deregulation side, but also on the international trade side. Yeah,
I mean, the report itself, could it be just a one-off? Should we look at just one jobs report as, the entire picture of the overall U.S. economy? And is it the view of maybe some of your colleagues or those you follow in this space that, knowing President Trump can be impulsive and shoot from the hip, that this was somewhat of an unforced error here? To your point, it does seem like he's shooting the messenger.
That's right. I think if it was just the July jobs report, like the jobs created in July, that would be the right way to look at it. But the downward revision for June and May are a big deal. I mean, basically, the BLS is suggesting that we overcounted how many jobs are added to the economy by the order of 200,000, which is fairly significant. And job growth in both those months with the revised numbers is almost zero. I mean, it's positive, but very, very small. So if it were just July, I'd say let's wait and see. Given the revision, we're talking about almost a quarter of a year here. And I think that's why people in markets are a little bit more nervous about this. And again, we'll kind of see. The GDP numbers for second quarter came out fairly strong. And again, there's other pro-growth elements to President Trump's agenda. So I don't think there's reason to panic, but I think we're also seeing that these tariffs are not maybe, the win that the White House or its allies have been portraying them. There may actually be some real costs to the economy that we're starting to see just in these downward revisions. Maybe we'll see them in other parts of the economic data in the weeks and months to come.
President Trump, Kevin Hassett, his National Economic Council director, they're alleging there is a partisan pattern in these reports here. And that's neither here nor there for us to get into. That's kind of the critique of the now fired BLS commissioner, her name, Erica McIntarfer. So who might replace her? I would venture to say that, 3 days ago, not many people knew, one, who this was, or who and what the Bureau of Labor Statistics commissioner does.
That's right. It's a good question. I'm not an expert in the world of statisticians, and it's an unusual position that people don't run for publicly very often. But we do have the issue, and I don't agree with Elizabeth Warren on basically anything, but she does have a point in that if he's firing the current head of BLS because he doesn't like the numbers, and he's hiring somebody new, even if that person has a decent record, you're going to wonder, well, what kind of pressure or expectations are going to be on that person? It's like the conversations you and I have had about Jerome Powell. Like President Trump disagrees with how Powell's handling the economy in terms of interest rates and cutting it, and he's put a lot of pressure on him. But if you were to remove Powell and hire somebody else, whoever he hires is going to have a bit of a shadow over him. And I think the same thing is going on here. So I'm not sure who he's going to hire. Maybe somebody who's been in the BLS before and has had a good track record if you can get them to come back. But the problem with this kind of firing, the shooting from the hip without any evidence or real clear argument, is it really does put a shadow over whoever's going to take the position, even if they're, on the up and up and are working hard to get the numbers as accurate as possible.
All right. Paul Mueller, as always fun talking all of this with you. Have a good night. Thanks for staying up late with us.
Yeah, great. Thanks for having me.